Hello, this is Dr. Frank with Pelican Wealth Advisors with your educational video series update, Roth IRA conversions without any out-of-pocket taxes. Now, many of our clients have 401ks and IRAs, and in fact, it's the majority of their assets. And it's really a tax time bomb because when you're 72 years old, you have to take out required minimum distribution, which is around 4%. And if you have $1 million IRA, that's an extra $40,000 of taxable income, which will push a lot of folks into a higher tax bracket. However, in 2020, the Secure Act eliminated the stretch IRA for beneficiaries with huge tax consequences. So I want to explain the impact that this has had on your taxes. And the solution for some folks is to do a Roth IRA conversion. We're going to show you a way of doing it with no out-of-pocket tax impact. Here's the table for RMDs. You can see that at age 72, it's about 4%, and then it increases each year. So again, that increasing RMD is going to cause some tax problems as you reach that age 72. Let me go over the Secure Act key features. It increased the RMD from starting age from 70.5 to 72, which was good news. It also removed the contribution limit for IRAs, so you can now contribute beyond 72, which is good news. And it encouraged the use of annuities in qualified employer plans, which was good news. But then again, it was offset by the fact that it eliminated the stretch IRA for non-spousal beneficiaries. So what does that mean? Well, it used to be that your beneficiary, like your children, could stretch your IRA over their lifetime. But now they have to withdraw 100% of their inherited IRA over 10 years maximum. So what's the big deal? Well, here's the big deal. Here's an example of a client who has a $1 million IRA. When they pass away, their daughter is 50 years old. We expect her to live 85 years, and the account grows at 5% per year. In both cases, the stretch IRA or the non-stretch Secure Act case, where you have to take out 10% a year. In the old stretch case, over her 35-year lifetime there, she would have paid $76,000 in taxes. Now she's paying over $388,000. That is an extra tax of $312,000 plus. Now, there are some exclusions to that, the 10-year withdrawal, and that is the surviving spouse can stretch that over her lifetime, but a child has to be a student or up to under age 26 for that to get an exclusion, or the beneficiary has to be no more than 10 years younger. So if you die when you're 85 and somebody inherits it is less than 75, then that won't work. Or if they're chronically ill beneficiary or disabled. We don't want to plan for those cases, so let's take a look at some of the benefits of a Roth IRA. First of all, their qualified distributions are income tax-free. There is a 5-year holding period on the gains, but you can take the contributions out anytime without any taxes, but the gains have to be seasoned for 5 years before they come out tax-free. There's no required minimum distribution, so you're not forced to go into a higher tax bracket. There's no tax on capital gains, no tax on interest, no tax on dividends, no tax on income, and it's a tax-free legacy for your beneficiaries. Now, let me talk about some of the ideal clients for a Roth IRA conversion, because it won't be suitable for everybody. But normally, if you're between the ages of 70 with no 10% penalty, by the way, if you're under the age of 59 and a half, you can still do this with no penalty. But if you're age 72 or older, it doesn't work because the R&D cannot be rolled over into a Roth IRA. You also would be ideal if you had sufficient cash to pay the taxes from outside the IRA to maximize the Roth, but it's not necessary. There's no dollar limit on how much you can convert to an IRA to a Roth. Now, here's an example of how we can show you to convert, let's say, your IRA to a Roth with no taxes out of pocket. So here's an example of somebody who has a $100,000 IRA and $100,000 in cash. Total amount is $200,000. We're going to move the $100,000 into a fixed index annuity with a 30% bonus, which immediately gives them a death benefit of $130,000. We pay the taxes from the cash account of $30,000, which reduces this to $70,000. And when we add $130,000 and $70,000, we have $200,000. So what have we done? We basically converted this to tax-free income for life in the annuity, and we end up having the same estate value. Now, let's talk about fixed index annuities, because some people might have some negative impressions about what these things do, but they probably are not completely informed. Number one, there's no market risk, no fees, and it protects your nest egg. We've seen double-digit growth potential indexed to the S&P and the NASDAQ and other investment options. It generates guaranteed increasing lifetime income. In the case of a Roth, it is tax-free. It serves as a supplemental pension or Social Security check, and you have access to principal while taking income, unlike a pension or a Social Security. And it's safer than bonds during rising rate environment, which is what we're headed for. So I would say it's a very effective bond alternative for folks who are not candidates for a Roth IRA conversion. So just to summarize what we feel the benefits are of a Roth IRA conversion. Number one, eliminates the RMDs so you avoid going to a higher tax bracket. Eliminates taxes on capital gains, dividends, interest. And also, if you put the annuity in there as a Roth IRA, you get lifetime tax-free income. It provides a means of circumventing the Secure Act, so you eliminate the huge tax burden on your children. In most cases, the 30% bonus annuity will offset the Roth conversion taxes. And also, the annuity protects the Roth IRA from losses, and that's very important because you don't want to convert, say, a $100,000 Roth to IRA to a Roth and then have it drop to $50,000. You ended up paying taxes on $100,000, and the Roth is only worth $50,000, and that's not going to make anybody very happy. All right, here's just a disclaimer. Just spend a few seconds reading it, but basically, if you're interested in either the Roth conversion strategy or using this 30% bonus annuity in place of bonds, just give me a call. Thanks very much for listening, and I'll see you on the next video.